The local bourse will be joining mixed global market activity, but domestic developments are still expected to be mostly positive. Wayne McCurrie, FNB Wealth and Investments Portfolio Manager, joining us now for an update on the latest at the JSE. Wayne, good morning to you. Give us your overall sense of how the markets are performing in early trade after tracking weaker global markets in the previous session.
Look, I mean, global markets were down about between 0.5% and 1% last night. And we had quite a negative day yesterday. So the market started very slightly positive, less than 0.25%. And it's really the winners from yesterday, which were the gold shares, that are the losers today. And the shares going up, even though it's quite muted, are all the rand hedge shares, because the rand's a little bit weaker. So Naspers, Prosus are up, but it's still very early in the day. And once again, I suppose we'll be dictated to by what the big overseas markets do during the day. And after a very positive month last month, where there was quite a bit of a rally, so far the markets globally seem a little bit weak starting off August.
Yeah, let's talk commodities. Oil prices falling about 1% in early trade before pairing some losses. This is ahead of the OPEC plus producers meeting. Talk us through those factors that are influencing this slide.
Well, look, at $100, everyone who's in the oil business is making a fortune, because their production costs are probably the worst producer is $50 a barrel, So everyone's making an absolute fortune if you're producing oil, which is one of the reasons why I think the oil price is going to fall significantly. Because once we're over the current squeeze because of sanctions on Russian oil, there's actually no shortage of oil worldwide. So I think the oil price is going to fall significantly, let's say over the next 6 months or the next year. Hopefully I'm right on that. But, OPEC at the moment can produce more, even though they swear they can't. They actually can produce more. They just might not be able to get it to the consumer because of infrastructure and logistics. When you start, Russia was one of the major oil exporters, and now you've got to replace that supply from somewhere. And secondly, the move to electric cars is unstoppable. I mean, it might take a lot longer than what people expect. And the oil producers must be very cautious, because a higher oil price will just hasten the move to electric. I mean, when you go to the garage and it costs you 1,800 rand to fill up your tank, you start thinking about electric vehicles. So they've got to be very careful and balance what they need as producers in an overall declining market. And they, in my view, they can't afford a very high oil price, because it'll just put them out of business sooner as everyone moves to electric.
Let's talk about the energy crisis, Wayne. The Zimbabwean president, Emmerson Mnangagwa, expected to visit his Mozambican and Zambian counterparts. This in a bid, we understand, to save his country's electricity import contracts that are being eyed by our very own power utility, Eskom. Do you think Eskom is likely to encounter problems here?
Look, I don't think that Eskom or the South African government will cut Zimbabwe off from electricity, from gas in Mozambique, but there's plenty of gas in Mozambique. So maybe we'll be able to get part of that gas and still be able to accommodate Zimbabweans' power needs out of Mozambique. And as I said, there's lots of gas in Mozambique. We might not have the pipelines. We might not have the infrastructure. We might have to enhance the ability of Mozambique to produce power in Mozambique, because obviously it's much easier to transport electricity than to transport gas. So I think there is a solution for all parties here, because, for the third time now, Mozambique's got plenty of gas. There's no shortage of gas. There might be shortage of infrastructure.
Yeah. Well, let's continue the focus on energy. Sasol restarting its Natref refinery that it owns with Total Energies. This is after the delayed oil deliveries that were experienced last month, resulting in a shutdown. Does this mean that the risk to refineries has been averted?
Yes, it has. Look, this energy shortfall, not being able to get the crude delivered to you, is a worldwide thing that's caused by the Russian invasion of Ukraine. There is a crunch on everywhere. I mean, when you look at the price of gas in Europe, I mean, I don't know, it's up 500% or something this year or since the war started. Everyone's in this energy crunch, but certainly being able to start NatRef is a very positive thing. Although we have been able to get, finished product supplied to us, and luckily enough, the pipeline structure in South Africa is quite adaptable. You can transport crude, you can transport, finished product. It's quite versatile, and actual refining capacity in South Africa isn't really a problem at the moment. But these refineries are getting very, very old, and to comply with the latest environmental standards, there's a lot of investment that's got to go into them. And of course, the refinery owners say that what they get paid to refine, which is based on a very complex formula, but essentially they get paid what it costs to refine the product in the Middle East. They say this is not enough for them to do the capital expenditure to comply with environmental standards. So there's still a long debate and a long discussion that's got to go on around that. But for the moment, we've got ample capacity in South Africa if they all are up and running and if we can get the crude. But it seems as though at least that crisis has been averted for now.
Yeah, let's conclude the conversation, Wayne, with the latest news coming out of the United Kingdom, and that is that Bain & Company is banned from working with the UK government. In other words, they're not going to be given any government contracts, at least for 3 years. This as a result of what they were involved in here, South Africa, which was state capture. If my memory serves, this company has been readmitted, at least in business leadership South Africa, to continue working. How should the South African authorities, including private capital, how should they react to such a news when clearly this company is being punished abroad, but here, where they actually did the damage, they remain in business?
Yeah. It's a very difficult one for me to answer because it's really a little bit outside of, investment markets. But obviously, Bain has been severely tainted by their involvement in state capture, and it's actually terrible that a company like that would still be allowed to do business freely in South Africa. But it's certainly, I heard Lord Hayne this morning on the radio about being banned from doing business in the UK, and it's good that they suffer consequences for their actions.
Wayne McCurrie, let me thank you very much for that update.